Good evening, good evening. So Sunday, 18th of October. So a little after 10 o'clock. Futures are open for a few hours. And this is just going to be an overview. So I'll show you pretty much where we're at. And the changes that happened end of market trading of last week. Start with the disclaimer. Investing and trading in the financial markets impose substantial risks where one can lose all or more than their initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. Okay. Let's start off with the famous bulls. The reason why I stick with Thinkorswim is because a lot of traders, this is really in for the novice traders who want to somehow either day trade or just manage their own portfolios. Right. I use Thinkorswim again because people who have substantial resource or capital for major heavier trading to where you are more active, and I'm telling you, active with size and within less of a time frame, meaning active day trading, in and out in that day, probably even minutes, seconds, if that. Whether it's scalping or taking positions that has a time frame duration that you're waiting for from entry until target. And some people are just, in my opinion, don't know what the hell they're doing, and it's just random, and I guess it's based on bias and seeing what other people do. Those who know me know the journey that I have been on, and this is as clean as my charts get. And it looks like a lot of lines, but this is as clean as they get. For momentum based trading, yeah, we'll use a SMI, but that's just to take it's not to place long trades or to have a position idea of where the trade is going to go. It's strictly in and out trading. It's nothing long term that I will base an opinion off of. All of my opinions are based off of price action retracements from point A to point B. How much does price retrace? Are there more sellers than buyers? When I look at, Fibonacci retracement tool, I'm pretty much just measuring the commitment on whether it's buyers or sellers. Plain and simple. Right? From bottom to top, from low to highs, right? There are obviously more buyers than sellers. Right? Beneath a certain threshold is where a certain group would overpower one or the other. Alright, so this is why this is as simple as it gets. This is math. Right? And you do your own homework, get your own opinion. This is how our markets run. These are how algorithms attach themselves to price and how to profit from it. If you really think that stocks are moving based off a P&L statement, all right, that's power to you. But those who are in the know all these charts are telling a story of where it's going to go, and to the tick. All right, let's get right into it. Let's put all these drawings that I had back up hidden. Again, this is for the spools E-Mini futures on Thinkorswim is /ES. Alright, those who've been I guess following me as of late, and I have some questions, where are we going right now? This chart was measured how you had gotten where support was, and let's get rid of this one because this I don't think we're going to see anytime soon. Let's remove this drawing. You can always get that back. Alright, from the breakout from the double top from 99 2000 to 2007 2008, from highs to highs, that breakout right, from the 2007 high until highs of the October 2014. Right, that's how I got this measurement. You see how snap it just about, you see where they line up. Right, this was that original support. And let's get rid of this one so you can see it. From highs to highs, this was that support that we had traded last year, 2014. We front ran it by a few points, excuse me, a handful of points, and to target, to the 2015s and change, 2115 and change. Right, it's not exact. Don't be anal, please. I'm just trying to get through to get the ideas. So it's pretty much from high to high that gave us that support level. Now, redrawing from the same anchor, from that same high to the 2134s, gave you a support level. Right? Let's get rid of this. This gave you that support level at the 1861s. Right? If you notice throughout the whole beginning of the year, we went sideways at that profit target, 2115s. Yeah, we overshot it, undershot it, but then eventually we came and we traded support. Major support, had to hold. If that did not hold, we was going lower. And so far what it has appears that that first initial trade was short covering at target, or at, excuse me, not at target, at target, but at the same time support. Didn't know if it was going to go through or not. So this is why at the 1861s I was reducing my short position in full and just closing the position as support. If there was going to be any continuation in that short from 2134 to 1831, this broke right on the 15th of October and had continuation. So this short trade is over. It's over. I am favoring higher. Whether we get that remains to be seen. However, this is how you adjust. You know where to start taking your short at, and if it blows up through it, you're out. No ifs, ands, or buts. Right? So you get out. You don't hold on to it. And yeah, it can trade lower before heading higher. But would you bet on that? It could keep squeezing shorts out of their position to highs, new highs, and we are right around the corner from that. Alright, so where do we go from here? It's now again measuring commitment. At this moment I'm flat. Equities to the at minimum. I'm flat equities. I have no bias right now. And I'm not going to get long. If this is a real long, being that the short broke, it will come back. There will be a pullback. If there's no pullback, then that's a squeeze. Meaning that in my opinion is not healthy. If there are buyers there, if there are organic buyers, there will be a pullback. And buyers will support that pullback. So now what this looks like to me is a double bottom on support with a higher low. So take it for the chart is telling you something, right? Yes, I had a bias to the short side. Once that short broke, you know, I'm not shorting lows. We're shorting pretty much, we know where to short at. You know where to short at. And if you're wrong, you're wrong. You eat it. You look for another setup. Where my bias kills me, that was long ago. And you can have all the fancy technical indicators on your chart. And don't get me wrong, you can probably make a little fortune off of it. But in my opinion, of what I have amassed out of these years, these charts don't lie. Right? All these other studies, and you know how many studies they have. I mean, you could just go through it. It's phenomenal. And believe me, I never erased it. I still have mines. You know, all these little things that you would save, and they're good for some things, but I never use them. I have not used them for when the euro's at 130. That's the last time I remember using them. It was right when oil was peaking. I was pretty much, I was at my turn, where just understanding the nonsense in this market. There's a lot of deception, and the reason why there's a lot of deception, there's a lot of money to be made. So it's up to you to put in the effort to really figure out what's moving this market and to profit from it. Because again, if you don't have billions, I'm talking about billions, you're not printing candles. You have no you have no impact on this market decision making. Right? You need billions to print these future candles. Right? Whether they hold remains to be seen, but meaning that you're not moving nothing. So you have to figure out what this market is telling you, what these participants are doing, and you better believe they are computer based. Right? There are people manually watching over it and making sure that it's going according to what it was programmed for. And you better believe this is what it's programmed for. Right? So this is keeping it simple, and keeping it simple does win. Right? So a lot of people who will tell you what keep it simple is, that, you know, they'll tell you a different story what it means, but this is what keeping it simple is. Right? This is price action, nothing more, nothing less. Right? The losing aspect, and the reason why I'm talking about this so much, because it's a few people that I've been in contact with, and the reason why they fail is because they don't keep it simple. And if you keep it simple and you're disciplined, and a lot, you know, it's really a 50-50 split between accounting, your own accounting. You have to take it as a business, the money that's in your account. You have to handle risk appropriately. Can you afford this trade? Can you afford it? Meaning, you know what the risk is. What the risk is, it's measured. If you're taking, you know, if you remember my positions of how I got back into the short after I had dumped, how I got back into it, I was selling 81s. I was selling 81s. That was the initial entry. Anything else is plus, but you know where you're wrong at, so you do the math. Can you afford this as a loss? And how many of those losses can you afford before you start, you know, making money? Right? It's a math concept. You have to do your own accounting. How many ticks? You know, instead of looking at what the points are and whatnot, start measuring everything in ticks. Right? Sierra charts, they have a great Fibonacci tool that'll measure in ticks. I'm pretty sure other platforms will do it, but I'm just familiar with Sierra. I wanted something that was low stress or low maintenance on the system, and especially if I was running different virtual machines, that I can handle my business according. But let me tell you, start measuring in ticks. Right? If you get the concept, each point is 4 ticks from point A to point B. Right? Ticks multiplied by dollar. You can sort of get your accounting done and on a spreadsheet if you measured in ticks. It's a lot easier to do, and you can know the overall the performance spread of what you need to neutralize your position if you measured in ticks, especially when you're trying to analyze all your risk. If it's something that's building an account, start with micro lots in the currency markets. It's so easy to get into, and the currency markets will always be around, whether they go to zero or not. That's an opinion, right? But they've been trading, and they'll always be there. And when the markets are slow, you better believe the currencies are moving. Some currencies, let's go into the currencies real quick. I'll get back into the markets. But just to go into the currencies, you know, a lot of people talk about this Japanese yen US markets correlation, right? And it's very true. But at one time, you know what, I remember the euro markets was correlating very well with equities. All right, so take it into back in your mind that these currency markets do move. Sometimes more, one or the other is more stagnant than the other, but they move. Real quick, let's finish up with the spools. I know this video is gonna get overwhelmingly long, and you know what? If you're trying to build yourself, you'll watch it. If not, then go watch TV. All right, they'll tell you what to buy. All right. Being that the short broke and the long is in play, and it has targets at 2260. Plain and simple. I don't know when time frame. You definitely don't know when. All right. But however, just as long as this market stays above 1797, and excuse me, I may have drawn that wrong. If we draw it correctly, see, I'm on a laptop right now. I think that's when I'm eating the computer. It's terrible. It's all fancy, but I can run 4 Sierras on virtual machines and think of swim, forget about it. And I'm not even running anything in the background. Alright, so from 2134, let's just make sure this is correct. 2134. I forgot what the low was, if I'm not mistaken. I think it was 1570 something. Let's go check. Yeah, 1586.75. See, that's why I always keep little so you never have to draw it correctly. You can just on Thinkorswim. I try to make everything easier. You could double click on the fib to edit it. You got to be in the ballpark of the fibs. Nope, I didn't want to do that. This is where my mouse is acting up. Let's auto zoom, please. Thank you. Alright, and pretty much what you're going to do, like to get little labels, I'll just show you real quick. You just pretty much make a fib. Like, say wherever you click on it, just go right or left, either or. And pretty much you'll make like a little line. It's pretty much all of them combined. That's all it is. Instead of having to switch back and forth from line tools. And then pretty much if whatever number that you needed, you just write it twice. Alright, and it'll show up like that. So that way you have little labels on anchors that you need to remember. So that was the low, 1586.75. So let's edit that one. 1586.75. Hit OK, bam. Alright, so pretty much I was just support. Just a long price action just gonna go below 1795 half. We're on our way to new highs. And that's the target. 2263. Alright. How long it takes, I don't know. Axe a profit. What can we do from here to get into the trade? Be patient and wait for pullbacks. You know, if you're patient, just have a sitting order. Good to cancel. And look, I'm delayed. So let's pause this while this happens and resume. So pretty much you just be patient, have a sitting order if you're really not impatient. And they're like this: if your impatience gets to you, it's gonna cost you. So what would I do from low? It can be from either or, so don't get me wrong. You don't know which one it's gonna run off of, if it's gonna be the 1831 low or this low. And mind you, this support level traded damn near to the tick. Alright, so let's just show you there are active participants on this. I didn't put this level here. It was measured from point A to point B, given. Look what price is doing. It's there. There are active participants. It's like a phenomenon of people just following. And these are not just people, but computers trading this. So again, you can either measure from this 1831s to wherever it decides to start pulling back. I mean, it could still grind higher. Alright, so if it grinds higher, then wherever the high is, alright, or it can be from here to whatever high. Alright, but right now as it stands, I'm taking it from 1831 to this high. It will be adjusted, so it's up to you to make adjustments. But if that was the high, if Friday was the high, alright, trough high. The pullback is around 1930s. right? That should be viable with a stop below 1905. All right, so if end statement, if it starts pulling back, and then this will be your first target, you'll take some off, buy another pullback. All right, everything else remains to be seen. It's just, you know, in the back of your mind, you'll be looking for a pullback. If that pullback never comes, then you may want to question this rally. All right, just saying. All right, this, I follow the ES. From the ES, you know, that will lead all the others. Yeah, others may, you know, have more of a performance or less of, but you know, if the ES is in bullish setups, the Russell, the Nasdaq will follow. All right, let's go into gold. Because the only way I've been playing gold was in physical. I did take a position last week and this week that just passed, but besides that, I've to compensate for my losses in the equity markets on my last position, I pretty much just booked the gains that I had. All right, now the reason why I really still do not trust gold, all right, is still, remember at the beginning of the year, we were still measuring off of from this high to low, and let's just get rid of this. This is the new one. From this high, from the, I believe it was, yeah, January high to the March low, sellers were participating off this 1225 level, and the target was 1100. We went to target. Alright, so now what I'm just thinking, I'm not sure. I know this level has been broken. That's why I said, you know, the gold short is broken. But there's very possibility that from this January high of 2015 to now the July low, we're still trading. And honestly, I would say that you just be cautious. Be very cautious. You know, I'm not to say I'm bullish. I'm a stacker or whatever you call these fanatics on gold and silver. Don't get me wrong. I do appreciate the value of it. However, I'm not going to blindly just give away assets for it. All right, so just be cautious. I would say just measure the commitment both ways. This is a two-way trade, and it's a two-way trade. Right, from low to high, gold never had a pullback that held. Now everything was broken. It was very sloppy. All right, so that's another reason why I wouldn't trust it. So the only way to measure it would be from low to high. If we start going below 1117, that's a long way down. You know, I don't really think the trade is good, at least not yet. Right, we're coming up into this resistance from the January high to the July lows. We traded it perfectly already. So I think if anything, it's a short. You have to give that credit that's trading, and the next target is down low 1,000, and you're still within the realms. Again, bigger picture. But what is your time frame? We're still in the bigger picture of this long. Right, 945, we should not be breaking below that. But are you gonna ride that long down there, especially in a futures contract? I mean, let's use some common sense. So this is what I call measuring your risk. Right, yeah, it looks bullish, but you can probably get it for better prices. So if you're doing any investment, I hope it's in the physical market where you're taking delivery on it. Alright, moving on. Currencies very quickly. I just want to talk about the euro. I know the euro is just straight sideways for this whole year. Waiting for data. How long do I have to wait? And let's pause until then. Alright, the euro. And this is a monthly chart. Just do it this way. I used to double click for it to auto zoom to focus back out. Sometimes it works, sometimes it doesn't, especially when you have the fib tool. Alright, for the euro, the reason why I want to point this out just from all times, alright, there was never, it's sloppy. The trend has been very sloppy, so it's like you know it's in a big wedge. What I mean by that, when the short breaks, alright, broken, then the long breaks, you know you're pretty much in a wedge. Right? You're trading in some sort of pattern. Right? And people should know I'm not a fan of patterns. Alright, they're meant to be broken. That's why you can't fall in love with the pattern. I mean, guessing it'll be drawn down from these anchors up. Right? So you know you're trading in some sort of wedge. So to your advantage, you have to know when you have to flip your position, right? Or you just pretty much, you know, you're playing those side of those extremes. Right? The reason why I want to point out with trading in a wedge, you always look for the point that starts to work. Right? And this is only when you know that short breaks, long breaks. You have to find out when it starts working. I mean, you have to just be on your toes. And then from this high to this low, this was your first trade that went to target. Right? That pretty much, you got short right in the 140s, and pretty much it just went to shit. Alright, so being that this happened, I would just measure from the 2014 high. You're looking for like next measured moves in this series, and when it will stop, you don't know. However, I would look at this 122 through 126 as major resistance, and the euro to go longer. But for right now, it's still likely in a bear flag up. Whether that breaks or not, I don't know. However, I know when you need to flip your position on this bigger wedge that started to work was from low to low. Low to low. This is when I got bullish on the euro. Mind you, I was selling all the way down. When this happened, mind you, these are monthly candles. I believe it was here, right into May, when this broke. You know that the trend down, at least as far as to be a waterfall down, that was ended. That stopped. You need to stop getting short and figure out what the bigger picture was. So throughout the year, and mind you, it's been sloppy. It's been very sloppy. This is why you really can't trust it. Alright, mind you, this is from low to low that broke. Mind you, they have been sloppy. Nothing for continuation. And boy, don't get me wrong, I'm happy that I love the euro. And these are one of the financial instruments that help build my account. However, this was just throughout this year was just very disappointing. If you wasn't peeling none off, especially on any kind of run-ups, you got hurt. So if you took some off here and here, you know, you got saved, especially if you was buying dips right around here, and you just got disappointed because this happened, if I'm not mistaken, early in AMs and stuff like that. But yes, throughout the year, the euro's been disappointing. Very sloppy because it breaks and then still goes to target. When you see things like that, you just have to be cautious as far as you have to know that you have to take some off. You have to take profits. If you want to play throughout, if you want to keep buying dips, it's cool, but just take profits at minimum half, so that way you can buy dips. Yeah, the euro is just so disgusting. Let's get rid of this. But from low to high, this was the first pullback that helped. First. Alright, so just be mindful that if this continues, and honestly that it doesn't show any likelihood that it is going to continue now. There's no like continuing pattern, I mean, that from Yeah, from this low to high, that was his first pullback that held. But where's its continuation? And okay, from here to here, broke. From here to here. Yeah, can inch lower. But if that starts going to target, this is why I've been reluctant to buy yet. I haven't added to the euro position. If anything, I've been adding more to the dollar short. But again, just be mindful. The euro's just been straight sideways throughout the whole year. So, and this is the bigger target of 120s. Oil, we're not going to talk about oil. And that's pretty much it. Again, the other equity markets will follow the ES. The ES is in longs. Just wait for a pullback. There's two-sided tradings all around. Just don't fall in love with a bias. Right? It's measure commitments. Guys, trade safe.